Welcome to Upticks with Jake Falcon, founder and CEO of Falcon Wealth Advisors. In this podcast, we help high net worth individuals overcome financial complexities. We do this by enhancing financial literacy and discussing topics in a language free from industry jargon. Join us as we help explain exactly what having a solid financial plan means, as Jake draws from years of experience in helping hundreds of individuals get financially organized and focused on their goals. We hope you find Upticks educational, entertaining, and shareable. Now, on to the show.
Welcome back to the show. This is episode 200, Getting to Know Your Advisor, Jake Falcon. That's a little weird, Cory, me introducing the show that way. I don't want everyone to think that this is a self-serving show all about me, even though that's probably what it is.
Jake's here to talk about Jake.
No, you're here.
Kidding.
That's why you're on the show.
I know. I'm just kidding. I almost asked you if I should do the introduction to the show.
Yeah, but no, I don't think so.
I don't want to take your thunder. I don't want to take your thunder.
Still my show. And we're celebrating. Today is the 200th recording of Upticks. Wow. And I need to do this. I haven't carved out the time, but I want to go back and listen or watch the first 2 or 3 episodes to see if we've progressed. Hopefully we've gotten better. I don't think we've gotten worse, but we might have. I don't know.
We haven't gotten worse. The first episode of this, Jake, I'm sorry, real quick here. The first episode of this show we recorded, I think, was back in 2017.
Oh, wow. Was it really?
I think so.
Wow. Yeah, you might be right.
When it was a podcast before a video.
Okay. Awesome. Yeah. So anyways, I have to check that out. So the point of today's show, though, is I subscribe and read stuff and unsubscribe or whatever, but some of those podcast gurus out there are suggesting that actually episode number 1 should be about yourself, talking about your purpose, why you're in the industry, what it is you exactly do. So it can kind of sit on your platform so that if people are listening and watching your content, you have kind of about us standalone video. And so we didn't do that 200 episodes ago. So we're doing it now on our 200th episode. So, and maybe we did, but I think it's a good time for a refresher, because you're right. If our first recording was 2017 or 18, whatever it was, 4 or 5 years ago, things have changed. So it's probably time to kind of just revisit that and talk about us. And so this video is good for current clients, certainly potential clients, people just kicking the tires, people stumbling across this on YouTube or on their favorite podcast platform. I want to talk about kind of my background, where I grew up, why I do what I do, how we do it, and all those things. So Cory, I'll kind of let you interview me here, and we'll go over it. And hopefully people can understand a little bit more about my purpose and what we're trying to accomplish specifically at Falcon Wealth Advisors for our clients.
Excellent. I will take the reins from here, Jake. So why don't we just go ahead and start from the beginning and have you share where you're from?
Right. Thank you, Cory. And so born in 1981 here in Kansas City, actually North Kansas City Hospital. At a young age, my dad got a job in Nebraska. So we moved to Beatrice, Nebraska. I lived there for only about 3 years. Somehow I got brainwashed and became a Husker fan in those 3 years. So I'm still a Nebraska Husker fan, football fan. But soon after that, again, a few years, I was probably 4 or 5 years old, moved out to a small town in West Texas called Borger, Texas. Both of my parents actually ultimately got jobs at Phillips 66. They have a refinery there. So that's where I grew up. So from age 4 or 5 until I graduated high school, I lived near Amarillo there in West Texas. Went to college at the University of Texas, San Antonio. Maybe I'm talking too much, maybe I'm going too far, but after high school, went on to college at Texas, San Antonio. I have a bachelor's in business from there. And then in 2006, I moved back to Kansas City to start my career in financial services.
All right. So the circle of life was complete there, bringing you back to Kansas City after graduation from college. So what ultimately got you into financial services? How did you end up there?
Yeah, so originally, and maybe foolishly, so I'm a big golfer, as most all of my clients know. And originally, an 18-year-old, I said, look, I'm pretty good at all subjects. I was pretty good at English, pretty good at math. I was in the honors programs and all those things. But I didn't really know. Obviously, I'm a kid. So I said, okay, well, I'll originally go to college. I knew I wanted to be in business in some shape or form. But being a big golfer, I didn't want to play professionally because I wasn't nearly good enough. But I thought, it'd be kind of cool to be a golf pro at a country club. I could be in the golf business. I could be around golf and play golf a little bit and make money doing it still. And so I originally went to college to be a golf pro at a country club. However, I went to work at a country club in college, great job. But I noticed that the pros there were working all the time, didn't feel like they were making a lot of money, and they didn't look very happy. So, and I know there's some really good, successful pros out there that are happy and love what they do, but my experience at the country club I worked at, it didn't seem that way. So I got an impression there that that's not what I wanted to do. And so looking back into college, taking all the business courses that I didn't like accounting, marketing was okay, didn't like advertising. What are some other, didn't like business law, really. I mean, it's okay. That's probably piqued my interest a little bit. But finance was easily, far away, my favorite business course that I took. It had a lot to do with math, numbers crunching, and then I knew that you could apply that to real world scenarios to help influence an outcome for someone. I was really intrigued and excited about that. So that's how I ultimately got into finances. That was my favorite course in college. And soon after college, that's the route I chose to go down.
Okay, good. And how, I guess at that point, Jake, when you started working in financial services after college, how did you first find clients to work with, given that you didn't live in Kansas City before you started your career in financial services here?
Right. Because that's tough, actually, because a lot of financial advisors, I think, kind of fall into it. Either their mom or dad was an advisor, so they just kind of follow in their footsteps, or they grew up. If I was an advisor in Borger, where I grew up, I would have already known, hundreds of people, which would make it a lot easier. Now, I do have extended family in Kansas City, but I didn't really lean on them to get clients initially, Cory. And I won't name any names with my firms that I've been at. I've been at a couple firms before we started Falcon Wealth Advisors. But the first firm I worked at, I actually, they had a really great training program. And believe it or not, I literally went door to door in the Northland. So they gave me a territory, right? So I had this little map of my little area. And I literally knocked on doors asking if people wanted help investing their money, which is crazy in today's day and age. But this was back in 2006. And it kind of worked, believe it or not. I was getting clients, and it was a hodgepodge. There definitely was no niche. I didn't have a specialty. I was just knocking on doors in a neighborhood. Believe it or not, that's how it originally started.
Yeah, so I guess I haven't given a ton of thought to that. Knowing you were knocking on doors in a neighborhood, like you just said, there's really not a niche to that. Like you can see a very broad array of people. When you were knocking on their door, were you talking to them about how to prepare for retirement, how to do financial planning, or was it just more, here's a way for you to go and invest your money?
Right. Yeah, it was very simple at that time. And again, the firm I worked at, I think, was still growing and evolving. And so they didn't have a lot of the financial planning tools, certainly that we use today. But no, it was just more about, really, they were good about creating relationships and saying, hey, if you're looking to invest and want to buy stocks or mutual funds or bonds or CDs or something, I could potentially help you. And the whole goal was for me ultimately to open an office in that neighborhood. So it was built around this community ideas that I'm going to meet everybody in this neighborhood. And then once I have enough clients and that firm had enough confidence in me, then we would open an office. But I didn't wait around that long. I felt at the time some of my best potential clients were at some of these bigger firms. And I just felt, frankly, at that time, and again, this is just my personal perspective and my opinion, is that I wasn't adding much value to people's lives. I mean, I was just telling them to buy an investment and then hold on to it forever. And I was only there 8 months before I left and went on to another firm, but I really just felt like they could do that on their own, right? If they really wanted to do that, what do they need me for to do that? I know, especially in 2006, it was a lot harder to buy investments on your own. But I think especially in today's day and age, if somebody wants to go buy something, a mutual fund or a stock, it's pretty easy to do on your own. So look at me, Cory. I was predicting the future, knowing that wasn't going to be, as far as I'm concerned, what was the right road for me to go down. Now, again, it's a huge company and they're very successful. They have a lot of advisors. I didn't fit in culturally either. Like when they would get us all together, I really stuck out. For some reason, I didn't fit in with the culture there either. So that was a big red flag for me also. When I was in a room of other advisors and I didn't really have anybody that, I got along with, it just didn't feel right. It wasn't a good fit.
You should have taken a drink of the Kool-Aid.
No, I didn't want to do it. And that's what they were doing.
Maybe that was the
right?
problem. I know, I'm just kidding.
And that's what they were doing. And I
Yeah.
didn't want to, I was resisting because I was new, right, to the industry, but I wasn't so gullible that I was just going to do whatever these people told me to do, because I wanted to make sure everything was connecting and I was aligning it. And I'm very thankful for them though. That was definitely my foot in the door in the industry. I mean, to hire a kid from Texas to move to Kansas City and take a risk on, I think that was awesome that they did that. And I'll always be grateful that, again, that was my foot in the door to the industry, because it's not an easy industry to get into, or it wasn't at that time. And so that's kind of led me to the next firm, which when I went to the next firm, again, I had a mentor that I got to work with every day. And it was much easier because they just said to pick up the phone and call people. It's like, sweet, I don't have to go knock on doors. I'm in air conditioning all day. Sign me up for that. That's
moving on up.
Yeah, that's not a big deal at all. So again, still in 2006, it was October of 06, I left and joined a different type of firm, still in the financial services industry. But that's where I learned a lot more about planning, investing differently rather than just putting somebody in something and telling them to hold it forever. There's more active management, which I appreciated, and learned a lot more during that stretch of the career.
And through that stretch, what led you to, narrow your focus into retirement planning specifically? Like, how did you go from knocking on doors, not really having that niche, to starting at another firm and learning more? How did you ultimately get into retirement planning specifically?
The team that I joined, that was their niche. And so it was easy though to be convinced of it. I mean, when you're looking to start, a financial services practice or build up clientele, that's a pretty broad niche to get into, especially when you live in a large metropolitan area like Kansas City. And, I really valued it because my parents were getting close to retirement. And I just thought that would be neat to be able to help them with that transition. So what's interesting is I got really excited about that niche and the retirement. I playing golf. I always, I grew up playing golf with a lot of older people that were retired or nearing retirement. So I always had a good respect for the older generation, the baby boomers, because I basically grew up around them on the golf course. And so to me, it was easy to talk to those people. Golf was a huge commonality because a lot of baby boomers play golf. And so I loved it. And I remember this, I don't think I've ever told you this, Cory, but I was early on in my career and I was at happy hour or something. And I ran into like another advisor randomly, right? Who was in at the same firm. I don't even know what firm he was at. And I said, oh, I'm a financial advisor too. Like, what do you specialize in? And he kind of rolled his eyes and was like, oh, retirement planning, like he was bored by it and didn't like it. And I always remembered that, like, I took a little offense to that and I didn't say anything to him, but I was actually jazzed up and excited about specializing in retirement planning because of 401k rollovers, IRAs, Roth IRAs, Social Security, pensions, health insurance, like all that stuff got me excited. And he was rather bored by all of it. So you could tell like he didn't have a passion for what he was doing. And I don't even remember the guy's name, but I would argue, I bet he's not doing that anymore. Because, again, this is not an easy industry to do. And if you don't have a passion or enthused about it, you're probably going to plateau and maybe just drift along or end up making a career change. So, or maybe a different niche. But anyways, I'll always remember that. Did I ever tell you that?
I don't think so.
Yeah. So it was interesting. It was so funny to me. Like, we specialize in the same thing. And here I am, like, really excited to talk about it and learn about that sector of the population that needs help. And this guy was like completely bored by it, almost a little embarrassed to say that's what which I thought was a little weird because I'm certainly not embarrassed of what we do. So, but yeah, so again, backtracking a little bit, so I cold called, we did seminars, and today I don't think it's the best way to grow a practice, but when you move to a big city, you don't know anybody, and you don't have any other, you can't just, it's not like a doctor's office where you just, hang your name on a shingle or whatever they say, and people come in because they need a dentist. there's a lot of financial advisors. So the industry, especially back in 2006, was a lot different, where you kind of had to find clients on your own. And that was one way to do it. You know, it's good. We held educational seminars. I think we helped a lot of people because we taught people, at least our viewpoint on the world and how we manage money and how we help them with planning. You know, and that's kind of how I started it, basically, with a lot of help.
Okay. So that explains what got you there. That firm, you obviously learned a lot, focused your specialty as far as, you know, retirement planning goes, or that area of focus. What led you to leave there and launch Falcon Wealth Advisors?
Yeah, there was two things really. Is one, and you were part of my team when we left in 2016, and Samantha was, and it was funny. They put us at that firm. It was kind of a newer concept, but they put us, if you remember, and I'm sure you do, into a huge trading room. So we were part of this big firm that had a presence in an office building. So you can think there were a lot of advisors on this floor of this office building, but they isolated our team into this huge corner suite, which was awesome. But after a while of being in there, we were so isolated. It felt like very often that you and I were kind of running our own practice. However, we had bosses and bosses telling us what to do, but they weren't in there, you know, risking trying to get clients and doing all these things. So I felt like we were taking a lot of the risk and doing a lot of the day-to-day management, and we weren't getting much support. In fact, we were still employees, even though we were kind of calling the shots in our own little group. So I didn't really appreciate that. And then the big thing was in 2016 when we left, was that this fiduciary standard was coming out by the Department of Labor. And at the time, a lot of these big firms were trying to digest the potential new law that ultimately never even got passed. But this potential new law, they were saying that basically if you were going to advise on retirees' assets, you had to act as a fiduciary. And all a fiduciary is, they're legally obligated to only act in your best interest, as opposed to a broker who can sell you products and they just need to be suitable for you. And so under this big firm, and there's no right or wrong, they're just different. We were kind of playing ball on both sides according to their mandate, you know, kind of thing. They said, hey, you can be a broker on these accounts, a fiduciary on these. We have certain rules. And it's not like they were trying to do anything bad. I think it was just they were managing a much bigger ship than our tiny little practice. And so we wanted to only be fiduciaries to our clients, is what this is boiling down to. We only wanted to answer to our clients. I didn't want some boss telling me, who didn't even know my client, what I should or shouldn't be doing, you know, or trying to pitch them products that we didn't necessarily agree with. And so that was really the straw that broke the camel's back. It was a great firm. You know, I kept winning all these awards, as you know. You know, you were up and coming advisor also. I mean, but ultimately we looked at ourselves and we said, look, if we're young enough, if we're going to take our careers and our lives and our clients' lives seriously, really we should only be answering to one person, and that should be our clients, period. And so we took that leap of faith in 2016, and it was scary. We didn't take any bonus money, right? Nobody paid us a big check to leave. We actually took a loan out. We took a big loan out to start Falcon Wealth Advisors. And we only did it because, frankly, we wanted to do what's best for our clients. And we wanted to have careers where we weren't beholden to some boss telling us what to do, who had no idea what was going on, you know, in our opinion. This is my opinion, in our clients' day-to-day lives. So again, I don't want to badmouth the firm. It was just, we had changed, we had shifted our mindset, and it was just obvious that we didn't fit anymore. So again, like I had that initial firm where I was kind of the outlier, you and I became more of the outliers at our current firm. And so it's very easy to see that we weren't fitting in with that culture anymore. So it was time to make a change. And they probably wanted us to leave, frankly, Cory, I'm sure, a little bit. So
we'll save that conversation for another time. But so in 2016, left the prior firm along with our team and launched Falcon Wealth Advisors. Can you tell me what the team looks like now, Jake, and really what your vision for the team and the business and the clients in the future looks like?
Yeah, that's a big ask. I want to give a little bit more backstory. So we left in 2016. A majority of our clients joined us. We rented a pretty small office. I think it was only, what was it, Cory? Like 2,000 square feet. I think it was a 2,000 square foot office.
Yeah, that's about right.
You and I had an office. We had a conference room. We had our trading room because we really embraced that concept. And we worked there for a year or two. And then we were very fortunate that, like I said, a majority of our clients came over, and then we started growing. And so we moved offices. to I think it's 5,500 square office building. And we've really changed our makeup of our practice, and it's completely changed actually from the days that we left our former firm. And so the old school way of doing it is that you and I would meet with our clients individually. And during that meeting, we would offer advice both on the plan and the investments. Now, originally, we would either update the plans or edit them, or we had a junior person doing that admin work that we would kind of send a note to after the meeting, like, hey, client's going to turn on Social Security now, they're going to retire this day, we need to change their spending. And then you and I would literally go in there and make trades. Like if we need to buy or sell a stock or a bond, we would go there and put the trade on or rebalance. And so we've evolved way past that, where now, as an ensemble practice, you and I are charged with really two things. One is we want to be there to give probably the most important advice to all of our clients. So today we've got around 700 clients. I've got approximately 400. You've got approximately 300. And we're no longer doing the day-to-day planning meetings with our clients. And so what we do though is if a client has a more complex situation, that's what we're reserving time to meet with our clients. So maybe they're going to retire. Maybe they're going to buy a new home or a second or a third home. Maybe they've got some tax planning that we need to be more involved with because there's some big issues as it structures the plan. So I really want to be involved in the complex, big decision matters. I've studied at the University of Pennsylvania's Wharton School on the investment side, and I am a chartered retirement planning counselor on the planning side. So anything with turning on Social Security, talking about Medicare, retirement, big ticket items, that's where my time is best spent. And frankly, that's where I'm adding the most value to our clients' lives. And same with you. Now, what we have though is we got great financial planners who are not junior to us, they're extensions of us. And what they're doing is they're doing a lot of the daily planning, checking in with the client, everything status quo, nothing big major going on in your life. And in fact, as they meet with more and more clients, they are also building up experience points to where they can tackle some of these more complex questions on their own. But again, they'll always defer to me or you if something's more complex. Now, the second thing you and I are charged with is meeting with most all of our new clients. So certainly if somebody is new to the firm or to our practice, we want to have that initial meeting with them so that we can explain this structure, make sure we get their financial plan established the way that we want to see it for them, because ultimately it's their financial plan with their goals, but we can help lay that groundwork that then our financial planners can maintain and further develop that financial plan. And then you and I don't no longer do trades. Do you still do trades for yourself, Cory? Fess up if you do.
Not really, no.
Not really? Or is that a yes or a no?
No.
Okay. So I don't do trades anymore either. In fact, I don't want to do trades because it's gotten more complex. As we have 700 clients, you can think that's a lot of money. That's a lot of portfolios. So we've hired 2 dedicated traders that's all they do. They're not assigned to any clients. They work with all of the clients. And so if I need a trade done for a client as a one-off, I'll just send them a task is what it's called, which I don't really like that word, but that's what it's called, for them to go execute the trade. If a client ever has a question about an individual position, they can go to our traders directly because you and I are still really making the call. Like we have veto power on what's going on, but we tell the traders what the rules are, and then they go and execute on those rules for us, for our clients, frankly. So it all starts with the financial plan. Then we say, okay, based on the financial plan, this is how we want them to be invested. And then the traders make sure that happens. And then we've got a big operations group. Sam has always been operations for us. She's always opened accounts. She's always done the transfers. But with 700 clients, you can imagine that that group can get really busy really quickly without much notice. And so if something pops up and 20 people need to take a one-off distribution, well, then they've got 20 phone calls and 20 things to do on top of their busy schedule already. And so there's 5 people in that group. They do a great job, but all new clients as far as opening accounts and transferring money, and then current clients, if they need to transfer money or take a distribution or bring in more money, they're really helping with the day-to-day flow of that. So if a client doesn't need to email me to do that, they shouldn't actually, because you're just going to get a slower response time. Because if I'm in a meeting with a client and I don't see your email and you need something done, that's not the best way to do it. The best way to do it is just to email service at falconwealthadvisors.com. And in fact, that goes for almost anything. So if it's a routine financial planning question, if it's an investment question that I don't need to be involved in, or if it's an operational deal, you want to email that email address. You don't want to email me, because I'm in meetings all day with clients when we're handling big topics. And then I'm in there with new clients, introducing them to the firm. And I don't want you to have to wait several hours to get a response when you could have just emailed service@falconwealthadvisors.com. And again, that goes to the whole team, except for me and Cory. And so the whole team can grab that email and get you a much quicker, appropriate response. And if it needs to be to me, they'll redirect it to me, and I'll certainly carve out some time to talk to you. That's never going to go away. Or at least maybe I shouldn't say never, because I could film 400th episode and say, all right, Cory, I'm no longer meeting with clients, even though I don't think that's going to be the case. But today, I get energy from meeting with clients. So I want to continue to do that. I love solving problems for clients and helping them with, again, major financial planning issues that come across their plate.
Thanks for sharing that backstory there. I want to know, though, Jake, now that we kind of understand the way the team operates, what's your vision for the future?
Yeah, good question. So today we've got 13 full-time teammates on our group here. We're going to keep filling it in. So I'm going to bulk up that planning group as we grow. I'm going to bulk up the trading group as we grow, and I'm going to bulk up the operations group. We're managing over $500 million for clients in 30 states. I do not want to be a huge firm. I don't see us growing, and because of the problem, and this is all my opinion. Get to know your advisor, right? This whole show's been my opinion. But I think if we get too big, Cory, that we're going to have to water down our services and our advice, because you just can't do it. Like, again, I've got 400 clients with me and 2 planners, and we handle that just fine. But if I had 4,000 clients with me and 2 planners, we wouldn't be able to give the advice that we give. And so we'd either have to hire a lot more advisors, which we could do theoretically. But I think we're just going to continue to get specialized. To answer your question, I want to continue to get specialized in our niche market already, which is mainly retirees from publicly traded companies. So if you've worked at a company for 20, 30 years and you've got company stock, that's really our bread and butter. Our secondary niche has been a fun one. It's professional athletes, business owners, high income earners that are kind of a little bit unique and outside the box. That's kind of we've got a group of weird. Maybe when weird's not a bad word, but
weird.
we got a group of one-off clients that are awesome entrepreneurs, that make really good income. So that's kind of our secondary, which is fun for us, because again, that keeps our minds sharp and learning new things on how to service those clients and make sure their plans look good. But those are really our 2 niches today. So I want to continue to drill down that. And I think you had an email a while ago about somebody, a little bit frustrated that we don't take on every type of client. And that's our stance, is we just can't do that. We're not going to take on every type of client, because then our current clients will start to receive poor service. And we're not going to do that. So we're not going to be the Walmart of financial services. I'm not trying to do that. We don't take on anybody as a client. They've got to be a good fit, not only financially to where we can actually provide some value, but they've got to be a good fit personality-wise. We're very lucky. We don't have any jerks as clients. Nobody's calling up here being mean to us or inappropriate. And if that were, we won't hesitate to resign the account. I mean, we've got a great team. They work really hard. We're not perfect, but what we are is we're transparent. We hold integrity as our #1 core value, and we feel like we provide a tremendous service and offering to our clients on both the planning, whether that be financial, retirement, or tax planning, and then certainly on the investment side. We think we're adding big time value on that versus our peer group advisors.
Very good. It's good to hear you say that, Jake. What industry problems are you trying to solve?
There's 2 things going on, Cory, and this is funny. It's easy for me to say now that I think this is my 16th year practicing, but the reality is the barrier to entry in our industry is too low. And I don't know what they need to do to fix that. But I feel like it's too easy to pass a few tests, get your license, and then the general public doesn't really know any different after that. I think too much of it is up to the consumer to educate themselves, and I don't think the consumer does. I think the consumer sees a title, financial advisor, wealth advisor, whatever, and they just all automatically assume that person knows what they're talking about, and that's not necessarily the case. So that's a big problem. Is I think there's a lot of people in our industry that shouldn't be in our industry. And then two, I think there's a big problem still, even though some of these huge firms are doing a great job of educating the consumer, there's a huge problem that a lot of people don't understand what the difference is between a fiduciary and a broker, and they don't understand what they're paying in the term of fees. Because if an advisor is putting you in a product, it says X, Y, if there's something other than the advisor's name on that investment, right? Then there's a fee probably associated with that investment. And there's a big, huge lack of transparency in our industry that I don't know why they don't just put the fees on the statement like we do. Because I think it's crappy. Or, I don't want to, I don't want to get too vulgar on here, but I just think it's a little bit disgusting that we have a lot of new clients that come in, Cory, and they have no idea what they're paying. They just trust this guy or gal advisor because they're charismatic, but they're completely overpaying for the services and the investments that they're getting. So they're literally costing themselves thousands, if not in some cases millions of dollars, literally just by overpaying. And so that's a huge problem. There's a lack of education and transparency. And then again, I think there's just a lot of people in our industry that shouldn't be advisors. They have no business doing this.
Maybe like the guy who rolled his eyes about retirement planning. Maybe not. I don't know. I don't want to pass any judgment there. But
no, maybe he was a good advisor. He just wasn't passionate about what he was doing.
What he was doing.
Yeah. But shame on. Again, I wouldn't. Again, if I go to a doctor, like I want my dentist. I want my dentist to be passionate about dental work. I don't want him saying, I don't want to talk to him like, oh yeah, I got to go in the office. I hate it. You don't want to go to a dentist.
Great, another mouth to look at. Yeah,
you don't want to go to a dentist that says that. You want to go to a dentist that says, I love what I do. I love helping people.
Yep.
I get excited about it. Like, I feel like my dentist is like that. He plays a lot of golf, which is fine with me, but so his schedule's tight, which is okay, because when I go and see him, I know that I'm seeing someone that cares about what they're doing. And I just think he does a good job. And so that, to me, that's what I think you should look at, as somebody that's passionate about what they're doing. And ways to find that is talk to them, ask them, what do you do? And what books do you read? What podcasts do you listen to? What are they posting on social media? If you're connected to your advisor on social media, right? I post dorky financial stuff all the time because I love it. And I think people should be reading it, so.
Very good. I think we're starting to bump up against the clock here, Jake, but before we wrap up, just share with us a little bit more about your personal life.
Yeah, time flies when you get to talk about yourself. So hopefully this podcast or this show was informational for everybody. And thank you, Cory, for doing it. Personally, I've got a wonderful wife, Rachel, and our favorite pooch, Einstein, who's a golden doodle, 3-year-old golden doodle. But yeah, my wife's great. She's a business owner as well. Her and I own a magazine company, which has been fun to be a part of. Live close to the office, both of our offices. She loves to travel. I don't so much. And so we travel because of her. That's it personally. Like I mentioned, I love to play golf. I like to read. I like to go on walks with Rachel and my dog, and just enjoying, living a healthy lifestyle, and ultimately coming in and helping our clients understand, what's important about their financial plan and really what it means to them. That's really what gets me going. And then building out the practice, that's a lot of fun also, and making sure that we're providing opportunity for our team members to have careers, and that we're ultimately adding a ton of value to our clients' lives that they don't think they can get anywhere else.
Very good. I feel like I got to know you here, Jake.
Well, that's good,
sure
Cory.
Our audience did too.
Well, good. If you felt that way and you already know me pretty well, then hopefully
Absolutely.
This episode had some meaning to it. Stay tuned. If you have any show topic ideas, you can email me at jake@falconwealthadvisors.com. I love cranking out these shows. We've been doing more about the market because I did a survey of our clients and they wanted to hear more market commentary. So we'll certainly keep doing shows on the market specifically, but we'll also keep doing planning shows around tax planning, retirement, financial planning, and all the fun topics that we like to talk about at Falcon Wealth Advisors.
Perfect.
Thank you again, Cory.
Thank you. It was fun. I'm glad that better late than never, right? Episode number 200.
That's right.
But
that's right. And thank you so much for interviewing me. And like I said, thank you all for tuning in. We hope you have a great week.
Thank you for listening to Upticks. Click the subscribe button to be notified when new episodes become available. Also, be sure to visit our website, falconwealthadvisors.com, and click the Contact Us button if you'd like to meet with Jake and his team.